Having founded Edelman Financial, which is the largest RIA in the country. Now it's managing around $330 billion in assets for 1.4 million households. I founded the company with my wife, Jean, 40 years.
Today, we're sitting down with legendary investor Rick Adelman to talk about what's really happening in crypto. We're going to break down why the market is crashing right now and what's actually behind the fear. Is this the end, or is it something bigger building beneath the surface? We'll also explore where Bitcoin could realistically go over the next few years. Not hype, not fantasy, but real long-term potential based on adoption and fundamentals. And if Bitcoin follows that path, what does that mean for altcoins by 2030? How high could they climb if the Bitcoin thesis plays out? More importantly, where could that leave Ethereum in the bigger picture? This conversation might completely change how you see the next phase of crypto. Make sure you subscribe so you don't miss powerful interviews like this. Tap the like button if you want to support the channel. Now let's dive in. Rick, I'd love to start with your perspective.
Having founded Edelman Financial, which is the largest RIA in the country. Now it's managing around $330 billion in assets for 1.4 million households. I founded the company with my wife, Jean, 40 years ago, and financial education was our focus. And so it's always been a key part of our business. I've written now 14 books. My newest just came out a month ago called The Truth About College. My most recent prior to that was The Truth About Crypto, which debuted in 2021 and was an Amazon #1 bestseller. I'm probably the most prolific writer in the financial advisory space with 14 books published in 8 languages around the country, around the world. I've also hosted a variety of television shows, produced 6 specials for public television. I have a new one coming out this June. I hosted the national radio show, the biggest, oldest personal finance radio show in the country for 35 years, was named one of the most important radio talk show hosts in the nation. And I was named 3 times by Barron's as the #1 independent advisor in the country. My firm is in the Financial Advisor Hall of Fame. I've won 3 Lifetime Achievement Awards, which basically means I'll be dead soon. And I've been on Oprah.
What is the single best investing advice you have ever been given? Out of everything you've learned over the years, what truly changed the way you look at money and markets? Before we dive deep into crypto, let's zoom out for a second and set the foundation. I have a lot of questions about digital assets, but first, let's talk about the bigger picture. When you look ahead to 2026, what do you see for crypto? Are we entering another explosive growth phase, or are we still in a long rebuilding cycle? How should investors mentally prepare for what's coming next? And most importantly, what kind of mindset should someone have if they're thinking long term?
I come from the financial services side, the financial advisory side. I'm not a crypto bro, but I've been in the crypto space since 2012. I've been one of the OGs of the environment, and I created DAC-FP, the Digital Assets Council of Financial Professionals, in 2015. Because I recognize that crypto represents one of the most profound technological innovations of our generation. And yet most of Wall Street was oblivious to this back 10 years ago. And so I created DAC-FP as an educational site. We don't sell product, we don't manage money, we don't serve clients. We serve the crypto community and the financial advisor community, bridging the two together to help the financial advisory field understand the incredible array of products and services that the crypto community is creating, to make them available to their investors, their clients, and to help the crypto community understand that if you really want to get market penetration, if you really want to manage more assets, if you really want to sell more product, provide more services, you need to work through financial advisors because they're the gatekeepers to 2/3 of America's wealth. So instead of trying to find an occasional person to buy your product, go to an advisor because they have hundreds of clients. You convince one advisor, you would all of a sudden have massive access to clients, assets, advisors. So we are the bridge connecting crypto with Wall Street. And we offer the CBDA, the Certified in Blockchain and Digital Assets Professional Designation, to teach advisors about all of this. And so my view of crypto is that it is an essential part of asset allocation. We argue very heavily that investors should have a meaningful allocation to digital assets. I wrote a white paper last June arguing that your allocation should be a minimum of 10% and as much as 40% of your portfolio. And I don't know of anyone else who's making such a statement. And so we look at what's happening now with this crypto winter as surprising.
If Bitcoin is supposed to be a neutral reserve asset, then why isn't it behaving like one right now? A lot of ETF investors believed they were buying into something stable. They thought they were stepping into a digital version of gold, something independent, something neutral, something that wouldn't move with traditional risk markets. But instead, Bitcoin seems to be reacting just like any other volatile asset. It's moving with liquidity cycles. It's responding to macro pressure. It's swinging with investor sentiment. So what happened to that reserve asset thesis? Was the expectation wrong from the beginning? Or are we simply too early in the adoption curve for Bitcoin to act the way people imagined? Help us understand why the reality looks so different from the original narrative.
Quick, easy money. They thought it would grow really fast, far better than the stock market would. And it did for a little while, but that didn't prove to be sustained, at least not so far. I think there are a lot of reasons going on for this. Number one, as is always the case, as you know, Austin, people who buy an asset expecting to get rich quick almost always get disappointed. That's a fool's effort, and it doesn't make any sense. So somebody who is a fair weather friend who bought Bitcoin when Trump was elected on the belief that they double, triple, quadruple their money overnight, they deserve what happened to them. But if you are investing because you do fundamentally believe that the president will deliver on his campaign promise of making the United States the crypto capital of the planet, he is delivering on that promise. He has rescinded all of the Biden-era prohibitions and restrictions that have kept the financial services industry out of crypto. He is now allowing banks, brokerages, and custodians to trade, custody, and provide services for clients and investors. We now have the Bitcoin ETFs, which are now exploding in variety and availability and investment offering opportunity. Which is unprecedented, which is why we've seen these being the most successful ETF launches in Wall Street history. We have a Congress that is now hugely supportive of crypto. We had the Genius Act, the first ever crypto legislation, passed last year. The Clarity Act is under debate now. We are optimistic and hopeful that it will get passed in the next couple of months. And so I believe the president is doing everything he said he would do. If there's any negativity regarding all of this, it is that, let's face it, President Trump is known for, I'll say euphemistically, a little bit of self-dealing. And this has turned some people off, that he is blatantly profiting, he and his family, from crypto. And this has left a sour taste in some people's mouths. And that has been a hindrance, frankly, to what's going on at the moment. Other people have recognized that we've had a variety of things happen in the past 2-3 months that individually were no big deal, but you add it all up and they collectively became a really big straw on the camel's back. For example, we had the whales last year. People that owned Bitcoin back in 2010 who haven't traded suddenly have started to do so, dumping tens of thousands of coins onto the market.
How do you actually recognize a true Bitcoin bottom? At one point, price came down and touched right above the 200-week moving average. For many long-term investors, that level has always carried serious weight. So when your friends or your clients start asking, is this the bottom? What do you tell them? What signals really matter in moments like this? Are you watching technical indicators like long-term moving averages, or are you focused more on sentiment and fear in the market? Do you pay attention to capitulation events where everyone seems to give up at once? Is it about volume spikes, liquidity drying up, or is it something more fundamental, like macro conditions finally stabilizing? When the noise is loud and emotions are high, what do you personally look for to decide that the worst may finally be over?
They're notoriously hard to predict, and in fact, you only know when they happen in hindsight. You're able to turn around and look back. I remember the most famous, I should say infamous, headline during the 2008 credit crisis was USA Today ran a headline that said, "Where's the bottom? No end in sight." They published that headline on March 9, 2009. That day was the bottom, but nobody knew it until 6 months later. So it's really hard to say. All I can suggest is that I believe, and I could be wrong, but I believe that we're closer to the bottom now than we were a month ago. I don't know how much lower it'll go, but I believe that the lower it goes, for those who fundamentally believe in this technology and its adoption on a global scale, I believe the lower.
If someone is allocating 40% of their portfolio to crypto, how should they really think about that decision? Is that allocation entirely in Bitcoin? Or do you believe diversification inside crypto actually makes sense? How much of that should be in Bitcoin as the core position? And how much, if any, should go into altcoins? Do you see Ethereum as a must-have alongside Bitcoin? Or are smaller projects where the real upside lives? When you build a crypto allocation that large, are you thinking in terms of stability first or maximum growth potential? How do you personally balance conviction with risk when the percentage is that high? And what mistakes do investors make when they size their crypto exposure too aggressively?
About it.
Yeah, I know that there are an awful lot of people who are Bitcoin maximalists. They believe very strongly in Michael Saylor and what he has to say. And I love Michael, good friend of mine. Michael's an incredibly bright guy. And I understand the thesis that Bitcoin maximalists offer, and it's kind of hard to argue with their thesis. But remember, I'm a financial advisor at heart. And I believe first and foremost in modern portfolio theory, and that means two things. Number one, diversification. And number two, long-term perspective. So I'm not trying to predict with a market timing view what's going to happen today, tomorrow, next week, or next month. I care about 5 years from now, 10 years from now. Second, I don't like to make big bets. I think there's a difference between investing and speculating. And while I remain very confident about Bitcoin over the long term, I don't know that Bitcoin is going to succeed in isolation. I think that many assets may. The other champions at the moment, Ethereum and Solana, probably numbers 2 and 3, and there's probably another half a dozen we can cite as well. So I believe in diversification, putting 12 eggs in 12 baskets. So when it comes to your question of what am I recommending, Bitcoin or anything else, frankly, I leave that answer to the investment advisor and to the investor. Based on your attitude about diversity, your perspective on the timeline, you can make the right choice for you. Should you be buying only Bitcoin? You can make a good argument for that. Should you be buying Bitcoin plus Ethereum? You can make a good argument for that. Should you be buying the what we call the picks and shovels, meaning not the coins, but the companies that are engaged, such as Circle, the largest U.S. Publicly traded stablecoin provider, or Bitcoin miners, or the custodians and exchanges like Coinbase and Gemini and Kraken, or should you be dealing with the crypto banks? These are all reasonable questions and
Hey everyone, it's Rick. I've been getting a ton of questions about a pretty bold prediction. Bitcoin hitting a $19 trillion market cap by 2030. Is that right? Do I really believe that? The short answer is yes, I do. But the more important question is, how do we get there? It's not just wishful thinking. There's a realistic path. So let's break it down. First, adoption. This isn't just about more people buying Bitcoin. We're talking about deeper integration. Imagine paying for your coffee, your car, or even your mortgage directly with Bitcoin. For that to happen, the infrastructure needs a major upgrade. We need faster, cheaper, and more user-friendly payment layers built on top of Bitcoin, like the Lightning Network, but even more advanced and widely accepted. Then there's institutional support, which is the real game changer. We've seen the first wave with ETFs, but the next step is major corporations and pension funds not just investing, but using Bitcoin for their treasury reserves. This is where it gets interesting. Is it global reserve adoption? Not necessarily countries replacing their gold reserves overnight, but a significant portion of institutional and corporate treasuries diversifying into Bitcoin as a primary store of value. This, combined with continued mass retail investment from millions of people worldwide seeing it as digital gold, creates a powerful two-sided push. So how does the network handle all this activity? Scaling is crucial. The key isn't to change Bitcoin's core layer, which is secure and decentralized. The solution is building more sophisticated layers on top of it. Think of it like the internet. You have the base protocol, TCP, IP, which hasn't changed much, but we've built countless applications on top of it. Bitcoin will evolve in the same way, with layers that handle millions of transactions per second. Now, the number everyone wants to know, the price. If Bitcoin reaches a $19 trillion market cap, and with a supply of around 21 million coins, you're looking at a price per coin of roughly $900,000. Some say $1 million, some say a little less, but it's in that ballpark. We're not talking 500,000, we're talking closer to that $1 million mark. What are the key milestones to watch for? First, regulatory clarity in major economies like the US and Europe. Second, the maturation of layer 2 solutions that make everyday transactions seamless. Third, watch for a major corporation, a Fortune 100 company, to announce it's holding a significant percentage of its treasury in Bitcoin. When these dominoes start to fall, the path to 19 trillion by 2030 won't just look possible, it'll start to look probable. It's an exciting decade ahead. Thanks for tuning in, and don't forget to follow for more updates.
Continues to expand both through government holdings, through sovereign wealth funds, and institutional holdings, endowments, pension funds, hedge funds, insurance companies, banks, brokerages, etc. We will continue to see greater adoption, greater inflows into this asset class. If you look at the total value of all the world's assets, the total value of stocks on a global basis, all the bonds in the world, all the real estate in the world, real estate is 3 times bigger than the stock market. If you look at the value of gold, look at the value of all the cash in the world. There's $56 trillion of cash in all the different currencies all around the world. You add it all up, and it's about 750 or about about $750 trillion in total value of all of this stuff. If you take the attitude, Austin, that everybody who owns a diversified portfolio ends up owning just 1% of their portfolio in Bitcoin, that's inflows of $7.5 trillion. That, plus the current value of Bitcoin, translates to about $500,000 per coin. It's really that simple. And what we're beginning to discover are 2 things. Number one,
are companies like Tom Lee's BitMine and Michael Saylor's MicroStrategy smart long-term bets on Bitcoin? Or are they just risky short-term plays? Let's break it down. These companies are often seen as Bitcoin proxies, a way to get investment exposure to Bitcoin without buying the crypto directly. The bull case is strong. Leaders like Saylor have transformed their companies into Bitcoin acquisition machines, holding more of the asset than almost any other corporation. This can create a leveraged effect, where the company's stock price might outperform Bitcoin's price during a rally. However, this comes with an extra layer of risk. You aren't just betting on Bitcoin, you're betting on the company's management and their financial strategy. MicroStrategy, for example, has taken on significant debt to buy Bitcoin. Critics argue this could force them to sell their holdings at a bad time if market conditions change. So what matters most when evaluating them? It's a mix of 3 things: the sheer amount of Bitcoin they hold, the soundness of their management strategy for acquiring and holding it, and the health of their balance sheet. Should you invest? It depends entirely on your risk tolerance. For investors looking for aggressive growth and who are comfortable with high volatility, these stocks can be a powerful part of a diversified crypto strategy. But for those seeking steady, more reliable portfolio growth, their volatility might be too high. They are not just a proxy for Bitcoin, they're a proxy with added leverage and additional corporate risk.
What remains to be seen in the marketplace is where investors are interested in focusing their energies. Meaning, in the past, and I mean the last 15 years, 16 years of Bitcoin's life, it has been difficult for a lot of people to buy Bitcoin because we didn't have the ETFs. We didn't have the easy access to institutional purchase the way we do today, which means that for a lot of folks over the last 15 or so years, it was easier to invest in a Bitcoin miner or in a Bitcoin proxy stock like Strategy than it was to buy Bitcoin itself or a Bitcoin ETF, which didn't exist. And so it made a lot of sense as to why that was the case. But now we do have all of these other ways of buying. The Bitcoin ETFs, the most obvious example of convenience, transparent, low cost, etc. Very high institutional liquidity in the case of, for example, Fidelity's and BlackRock's ETFs. So for those reasons, will investors continue to have as much interest in Strategy and Tom Lee's firm, as opposed to just going direct into Bitcoin in a way that they weren't able to do so in the past? That's an argument for why the interest may not be as strong as it was historically. But on the other hand, we can argue something else. These 2 investments represent a leverage opportunity. They represent a scale that Bitcoin itself doesn't offer. That investing in Strategy or any of the various stocks or bond offerings that Michael is providing in the marketplace gives you a chance to amplify your investment with, depending on which way you go about it in Michael's shop, with risk parameters that Bitcoin itself doesn't provide you, make it appealing. So it's hard for me to know which way it's really going to go. Again, I would fall back on my axiom of diversification. I don't know that we should be making a big bet maybe you do a little bit of everything. Warren Buffett is infamous in crypto circles because of his hatred for Bitcoin. Uh, his famous quote that it's rat poison squared. But Warren did say one thing that is very relevant for the crypto community. He didn't say it about crypto. He was saying it about stocks, but it's applicable to crypto. He said, better to be approximately right than precisely wrong.
So bet on the general trend.
Yeah, I think that let's put it this way. I could invest exclusively in Bitcoin. You could invest exclusively in Ethereum. 10 years from now, we'll be both laughing at the guy who did neither.
Interesting. Rick, Altcoin Daily speaks to an audience of over 3.6 million across all social platforms. If there's one book or writing from you that you would recommend they start with first, what would it be?
First would be my book, The Truth About Crypto, because that book is designed for people who don't know anything about this subject. They don't know what crypto is. And the book starts off with, what is Bitcoin? What is blockchain? How does it work? So that book is a really 101 kind of a class to get you integrated and understanding and fluent in this topic. It's ideal for advisors and investors who are trying to understand what this is all about. I would start